All right, we're live. Oh, welcome to Wall Street Beats. Benjamin Bry here. It's March 24th. It's I'm not sure what day it is. It feels like this year's already a year and we're only at the end of March. I'm joined with Robert Marston and Kevin Bakes Baker. Robert, where are you right now? You're down in Florida? You look like
Yeah,
somewhere warm.
lovely Florida, Fort Lauderdale, close
Fort
to the beach.
Lauderdale. All right.
Working on the
Yeah.
tan, and I raised a lot of cash, Benny, and I'm working on the tan and just enjoying the scenery.
Good. I mean, that seems like a good thing to do in this market. I, we were just joking in the pre-show. It's just like not exactly a fun time to trade, is it, Kevin?
Not even a little bit. Not even a little. I'm finding very little to do. I said in the pregame that it's a bull market in cash. I've taken some losses. I've taken some small profits. I'm up to 37% cash, and maybe going north of that, and poking around in some shorts, which I put in the chat. So
I totally agree with that, and I have a very levered version of that with the SOFRs, and I've gotten my ass handed to me a little bit in this month because we've had the bear flattener where the short end of the curve is blown out. But I mean, look, we're getting squeezed all over credit spreads, oil, and so if you're going to get 4% for the 2 year, I mean that's pretty good right now. I think that. So when you say it's a bull market for cash, it truly is like the most attractive thing probably out there right now. Robert, what are we talking about today, buddy?
Well, I got a couple of stocks I can mention. I'm not doing much like you guys. I started the year 0% cash, and I'm up to almost 30. And Bakesy's put me to shame at 37 on his way to 40. I'm going to have to catch up, Bakes. So
the cash race.
The day's young. The day's young.
So I mentioned last week TATT. I had sold my last position. They pooped the bed. The stock is now down considerably. It's always good to get out 100% of a long position at 3 to 4x for you. TATT sold it at 50, 55, 60, and 65. So got a good price. It's 40 today. And the reason I'm raising cash is because I have a formula, gentlemen. And stocks have to be down, overreacted down, meaning down a lot, private bear market, to low valuations on solid fundamentals, although usually earnings misses, negative revision. Because you don't get the down a lot without the hiccup. So you have to have the hiccup. And that's what I buy. And then when I sell, when they get fully valued or what I perceive to be overvalued, I then need that buy point, that buy formula to reinvest. And I've been selling a bunch of winners completely in the last 6 months. And I just haven't been able to find anything that fits the buy formula. And one of the buy formula parameters is price to sales ratios. And Robert doesn't do anything more than 1.5 to 2 times enterprise value to sales. And right now I'm selling stocks. My Arteris I totally sold at 6 to 8 times sales, and this got sold at 4 times sales. So I need these stocks to become buy candidates to drop 50, 60, 40%. And why would I hold a stock that I couldn't buy it back unless it went down 75%? So I had to sell. I'm forced to sell when that happens. So yeah, the cash is up to 30%. I could raise a lot more cash if I wanted to buy stocks I'll never get a chance to buy again because they've done what I just said. They went from 2 to sales, some 2 times to 6 times sales, and maybe at 4 they bottom and then they go back to 6 or 8, or they grow sales 30% a year for 5 years. And I don't want to let go of that. So that's the process. That's the reason for the cash. It's the reason for the TAT sale, in addition to others. And the inability, I think in 6 months, I've mentioned 2 new names I bought in this show. One was a double, which was in test. And the other one was a spanker down 2/3, 50% to 2/3. And that was SimilarWeb. So they're the only 2 new names I have. I am circling one called CRH. It's an aggregates company. It came from Ireland, redomiciled in the U.S. It half the valuation of Vulcan Materials and Martin Marietta Materials. It's 10 times EBITDA versus 17. It's 16 times earnings versus 25 for the U.S. guys. And it's had a nice hiccup. Well, back in the early days of the show, I bought this and I pitched it. And I bought it in the low 60s, sold it in the mid 80s, and it went to 130 without me. So that was a screw up. But if it dips, another 10 to 15%, I'll probably go back into the position. So that's one that I'm circling, and I just wanted to give people an update. Telebio, which is my hernia patch company, I haven't forgotten about it. I had a big profit in it that I let turn into a reasonable loss, TELA, and I have hope that when they release earnings tonight after the close, there'll be some news that'll get the stock marching back upward, because it's a very cheap stock with the worst income statement and balance sheet I ever saw in my life because of the incompetence of the CEO. And I'm trying to get the CEO fired by talking to the chairman and the outside chairman of the board. So I will have more news on that when I do my next show. Finally, Ben, I sent a chart around to our chat, real-time chat, on the drawdowns. As you know, I do seasonality, cyclicality patterns, and all that, and I factor that into my decisions on the market and my gross exposures. And somebody posted a table on Twitter yesterday that I thought was interesting. It showed that midterm election years have bigger drawdowns on average, median and mean, in the mid-teens than every other part of the election year cycle, first, third, or fourth, and which they're all under 10%. So the median and means for the 6 other observations there would be 8, 9, 10%. Maybe there's one at 11 for a median or mean in one of the other years. So it's considerably north of all the other election years. But and then when you get this deep correction, the following year turns out to be a very good year. But the most interesting thing in the table was that the drawdowns are concentrated 75% in the second half of the year. Normal seasonality, drawdowns are concentrated in the second and third quarter of a year. So the fourth quarter in an election, in a midterm election year, is the most frequent bottom for a midterm election year drawdown. So I don't think this drawdown is over. I'm going to buy the dip, but the dip needs to be 15% or more, and it needs to happen in the third or fourth quarter of 2026. So that's my plan, and I'm sticking with it. I've got a lot of shows to do between now and then without a lot of things to talk about, people.
Man, that's chalk charts done nothing for a while, huh?
Which one?
This QQQ.
Yeah.
Damn, just flat. Not making any money. Bakes, what do you think about that chart?
Well, I put this up because when I do shows with Steve Lamar, our other partner, he asks about this all the time, and I was struck. This looks a lot like the S&P too, by the way, but you have this. Bottom line is this 580.74 is a big level, and if that goes, you have a close below that, and I suspect that Besant is a chart reader too, and he probably says to Trump at some point, you got to get these stocks going again. And I think that's run its course. You see this low here at 582 on I guess that's Thursday. That's Friday. Here's Monday, yesterday, and Trump posts and makes it touch the 200-day moving average, but it closes at the low. And now here we are taking on water, and I think we're threatening this 580.74, and all the big components are really looking pretty bad. Nvidia is probably the best looking. It's the cleanest dirty shirt, as Johnny Cash would say. And Nvidia, Tesla's already joined to the downside. Microsoft's in a bear market, so I'm watching this 580.74 level. And PSQ is is the short equivalent ETF that people can pull off the shelf, which is imperfect, but it's okay. But 580.74 on the Qs looks bad.
Yeah. It's a bit of an Adult Swim situation out there, boys. Any other charts you got for us, Bakes?
I have two that I'm circling, and I'm often accused of just being Momo and buying highs, and but this is really what I prefer to do if the market gives it to me. And this is a long-term chart of this is SARK. This shorts on a daily basis. So again, it's imperfect, but I made money in 22 because of this. And it shorts the Kathy Woods ARK Innovation Fund, ARKK. We've gone from 253 down to 27. Here we are at 3260. This is a base. It's almost the inverse of the Qs if you look at it. And if we take out 3480 on decent volume, I think we start climbing up, eating through this resistance and making some money. Tesla's her number one name, CRISPR's number two, and Circle is number three. And so I think those names it's gonna be really tough to make money in those names over the next year if I'm right. And I'm looking for 3480 to make it official. But this is starting to look promising. I'm going to go long SARK, which means I'm short ARKK.
All right. Well, that
Can't disagree with that.
Yeah, I agree. I don't really got much. I agree.
I got one more, if you don't mind.
Keep going. Yeah.
And this is this shorts China, the top 35 stocks. Baba is number two, had a lousy day the other day. This is ProShares short Xinhua China. I thought we're pronouncing that right. This is YXI, and this also looks pretty. The 50-day is just coming up through the 200. The 200 is just about to turn up. Relative strength is improving. It was below 50 when I started looking at this. The volume is picking up, and here's what happened in the past. So if this retraces some of this, and with China's main two oil sources now heavily damaged and under the influence of the United States, I can make a pretty good case that China's going to have a really, really tough time in the foreseeable future. So I'm getting ready to short the 10 cents and the Babas of the world via this ETF YXI, shorting the China 25 from ProShares. I have not pulled the trigger, but I'm real close.
Okay. Yeah, we'll pull up the gold chart for a second.
Okay.
What do you think there?
I think it's got to hold this. This is obviously divided by 10, so it's got to hold 4,032. It's got to hold 4,000. Otherwise, you're starting to threaten the 200-day here, and that sends off all triggers. You have a gap down here, which is negative, and you've got all this volume down here that shows people are really wanting to leave the exits. But you can't be that surprised when you go from basically 2,000 to 4,000 in a year and a half. You have corrections. How bad this is going to continue to be, I don't know. But the more time it spends under 400 for the spies, and I'm sorry, for the gold GLD, and for the metal 4,000, the more time it spends below there, the tougher time it's going to have to get moving to the upside again. Yeah,
I mean, you have to think that it's being used as a piggy bank right now. That's kind of what's going on.
Yeah.
Deleveraging plus, a lot of countries do. Look, when energy goes up, everyone realizes what real money is. And, you hear about these countries that are importing energy, but then their exports are going down and, might have to sell some gold, basically. And I think that's kind of what's going on there.
Yeah, you sell what you can, not what you want to.
I'm going to make a comment here, guys. Not that I could support it, but I think it's down 9 or 10 days in a row. And somebody posted on Twitter that's happened 3 other times. And the bottom was farther off and a lot more than the 10th day.
Really? That's
Yeah.
interesting.
So,
No, that's right. It's been very persistent since March 13th. It looks like
Yeah, it's not good.
March 11th. Yeah, no,
But you know what? Hang on. I'm looking on mine. We can say not good and all that, but like let's be clear. It's like back to where it was at the beginning of the year. You know, it had
Right.
that cheap
Yeah.
blow off mood. So whatever. You know, I think that sometimes we forget that. Like I was shorting all those bubble stocks in the October period, and I remember I shorted them after they'd already gotten hit, like Oklo. Pull up that Oklo chart as an example. I'll just use it as a teaching moment. Since we're not doing a lot of trading, might as well talk, about a concept here. You see that blow off top with the perfect head and shoulders, and I was hitting it right around there, around 150, or maybe a little bit before that, but like somewhere in that right side,
Yeah.
and then
right shoulder.
like that. So yeah, exactly, right in there. And that's kind of what happens is like, okay, fine, yeah, it's gotten destroyed, but it's kind of where it was a year ago or something, right? Like, okay, these blow off tops always kind of like confuse people of like, oh, that's where it was, but it's like never should have been there type of thing. Does it make sense?
Yeah.
Like if we were to just say linearly, like here's like some rate of growth, it's kind of like in the range of that. It's just that deviation to the top, and we saw that all over the place. So I don't know. Not too much more to say about this stock, just using that as an example. But I mean, as we go forward here, what's your guys' playbook? Are you guys sitting here waiting for something, or are you going to wait for the war to end? Are you going to wait for, what's your kind of thinking as we're going out, not just today or tomorrow, but like over the next couple months?
I thought I said what I'm doing, but I'll re-say it. I'm sitting
No,
around.
I mean, like, but is there like, what are you looking for as a change in what you're okay? I know what you're doing. Like, what do you look at as what you would change your attitude, not be a cash raiser? So that's the question I'm trying to ask.
Well, if the stock market prematurely went down enough to populate my new buy screen with lots of attractive ideas, I would start nibbling for sure. But
Okay.
the issue isn't that there's stocks that aren't down. I followed a company secondarily. I have exposure to EOS. It's a battery company, and I discovered it because of my own company. Tetra is a big supplier to them, and it was $6 or $7, and that's a good story. And it went to 8, 9, and 10, and it went to 20. While my impression was that they were going to lose their, miss their numbers because the Tetra guy was hedging on them, making their shipments to them. And it's 5 today. It's down 75%. But just like the overshoots that you talked about, the 20 was insane literally insane on evaluation. So, it's not even cheap at 5. So we're in a position now where show me half of sales, show me 75% of sales on stocks. They have to drop 70, 60, 80%. I can't buy stuff because the valuation parameters. I don't want to trade on the long side until they hit they get under my maximum valuation that I'll pay. So I'm sort of stuck.
Yep.
Unless I want to cheat my formula.
Nate, you got anything?
Yeah. I've got a very, I think simple discipline. I go through 5,400 ETFs. I find the 10 best. I have a sell discipline where if I'm down 15%, I shoot them. I don't ask any questions. I have no losses right now. And I also have, that moving average discipline that goes over 3 different times. And I get out of things, not at the top, but I tend to catch, this middle 70% of big moves. And then let the market tell me where to go. So now the market is telling me 37% in cash, and look to short Kathy Wood's ARK, and look to short the big Chinese stocks. And and frankly, the PSQs, I mean, the shorting the Qs is right behind it. So, that's why I'm teasing it now. I'll say it, in the chat for members, when I pull the trigger. But I tell you, it's very satisfying. I know exactly what I'm doing every single night. Every single night. I'm like a robot. And
good. You got a process.
Because I've done it the other way where I get emotional and I say the market's wrong and I fight the tape and I lost. So now I win. So
yeah, fighting the tape's a bad strategy. Because when you get yourself where you get emotional, it just and again, I come back to like, hey, sometimes doing less is more. And you don't get yourself caught in situations where this is just a bad tape and it's not a money-making tape. It's even on the short side, it's hard. It's not like super easy because they're not going down
being
fast
short
enough.
yesterday felt like hell.
Exactly.
I mean, look, my credit default swaps are doing well. That's one trade. That's one area of the market you can make money on, and that's being short, and you lose money most of the time. So whatever. It's just a tough spot is all I'm just trying to express. I guess anything else, or should we call it?
I'm good.
Me
All
too.
right.
Me too.
All right, well, keep tight and quick here today. This is Wall Street Beats. I am Benny. That's Bakes, and that is Bobby.
Thank you,
All right,
gentlemen.
we'll be back at you tomorrow.
All right. Thanks, guys.
Bye.
See you guys. Thank you, everybody.